All right, what's going on, everybody? The last stream of 2023, and probably the last stream I'm going to do on my current MacBook setup here. So I got a computer built, so it's on the way. I just got to wait for it. I got everything else. I got a new monitor to go with it, nice keyboard. So I'm making the switch from Mac to PC. So I'll let you know how that goes. But all in all, this year, obviously, if you take a look from just an overall standpoint, obviously, we had a nice recovery in terms of what had happened in 2022. So from our low here down in January 3rd, if you went long on day one, you would have been up a stupid amount of money. So just interesting to look at it, obviously, with hindsight, but just to look back throughout, what a lot of us who were I guess relatively new in terms of just years wise in trading or just looking at the market in general. To me, it's just we could view that as another year to throw it under the belt. That's more experience for you, and you're only going to get better from that point. You notice that a lot of people who do end up sticking throughout the ups and downs are typically the ones who end up figuring this thing out in the long run. So, just dating back to myself, going back to 2020 when I first popped on with a stock burner, the Twitter account and everything like that. A lot, and a lot really doesn't do it justice, but there are a lot of accounts that were here and are no longer here. So if you've made it another year, congratulations. That's pretty cool. So but anyways, in today's stream, I charted out a bunch of names I want to run through. If you guys have any that you want to take a look at, feel free to post them up here in the comments, whether it's on YouTube or on Twitter, the live stream, whatever. But I'll get to them as well. I figured I'd make this video. I know it's 1 o'clock on a Saturday, so I'm competing with everyday life and stuff like that, but that's okay. This will be recorded and will also be on what's it called, on YouTube if you want to go back and take a look at it later as well. But one thing I want to do is make sure that I have timestamps down. So when I talk about a specific ticker, the timestamp will be there. So just got to make sure I remember to write that down and write that in so we don't gloss over it. But here we go. Let's get into it. NASDAQ will be first as always. Obviously, we'll look at it from a really long perspective in terms of the year. One thing of note, one thing that I've been saying for a while now, and this is not like a pat on the back type of situation or at all. Just overall, I did not anticipate us to take out this high here going into next year. And the reason for that is if we were just to quickly go over here and we'll make it on a yearly time frame, I'll show you what I mean. So if we look at the year as a whole, you're going to notice that this year's candle is an inside candle. So what that means is, I know it's a little sloppy now, but we did not break the low of last year, and we also did not break the high of last year. Okay, so typically what that would lead into, I guess, would be a explosive type year where you can get some serious movement, whether it's a breakout, breakdown. And obviously heading into 2024, we have a lot of things to keep in mind in terms of obviously where the economy is, what happens with the presidential election that's going to be coming up here. It'll be here before you know it. So really anything can happen, I guess. So just with keeping that all in mind, this is kind of where we sit and where we're at. So obviously that high on NASDAQ would be up here at 17,700. This past week, for the second time, we got up into this bearish imbalance on the weekly time frame. This dates back to January of 2022. And we got sticky a little bit for the last 2 weeks. But as we go into some individual names, you're going to start to pick up and see how despite the end of the week for this past week, which to me, I really didn't do much of anything. And reason for that, typically that last week of the year, it's just not as clean. Were there moves to be had? Yes. Was there money to be made? Absolutely. Just one that I typically would avoid, especially after my first bout. It stinks going closing out the year when you're not really dealing with the best price action and you get suckered into it and you lose some money, and which would have been nice to have for just at the end of the year to be able to look back and say, oh, I made X amount of money and not give any back. So yeah, last week really muted. I took 2 trades on Wednesday and that was really it. For the most part, I just basically managed, I guess you could say. Not really, I didn't sell anything, but just watch some other individual names in that way. Um, it kind of helped try to avoid looking and searching for things on NASDAQ that may or may not have been there. So, but yeah, so overall, I mean, look, going into next year, going into this, next week, I guess you could say, at a certain point, we're going to have to set a range on this most recent run up, right? So just looking at it from a broader standpoint here, you have your low to your high. That was the price run that took out these highs right here, right? We got our retracement back down into our little golden pocket, specifically a bullish imbalance, also a bullish breaker we have right here. And the bullish breaker is the low, high, lower low. And upon breaking that, we would expect that area to offer a level of support, which in this instance, in many, many instances, it does. So we took eventually, after bouncing from this level back in October, took out this high to complete my model, which I have a video on YouTube. If you haven't checked it out yet, go for it. To me, it's very simple. Just you need to have a little bit of background knowledge in terms of what an imbalance is. How do you set a price range? What's our target? What's the draw on liquidity? So those are all little things that having a little bit of background knowledge on is extremely helpful. But ultimately my model just looks like this, whether it's on a weekly time frame, daily time frame, 15-minute, 5-minute, you name it. This is the model that I operate with using, and this is the setup that I use. Really about 95% of the trades I take literally come from this. I used to try all these different tactics and things like that. I just noticed that the success rate and the probability of being successful in them were much lower. So I would prefer to have a higher success rate and win more and not blow money on stupid stop outs and things like that. So, but also even with this model, look, even if it wasn't to be correct, you're very well defined in terms of, all right, where do I have to take this loss, right? I think that's something a lot of people struggle with, because you might have a level, you might lose that level. Then you look down below and you say, oh, well, I have another level here. I'll hold on to it and let's see if it bounces here. And then it doesn't bounce there. But then in another, 2 points, you have another level that you wanted to bounce from, and then it doesn't bounce from there. And then you get caught in quicksand and you keep getting dragged under and you're watching your contract just evaporate. This kind of, to me, takes a lot of the thinking out of it. It also helps that I could just place the futures trades right on screen. But it takes a lot of the thought process out of it, where I know just based on back testing from practice that if I were to stop out here, this is probably a pretty good spot to stop out. That way I'm not going to get sucked in under and get smoked for more money than I wanted to lose in a specific situation. So, so that ultimately is what I got on NASDAQ moving forward here. You do have a pretty big bullish imbalance here, and this would be our retracement back down into previous liquidity or buy side liquidity. So when we get to a point where we take out buy side or sell side liquidity, at that point, when people might say, "Oh, I'm still bullish. I'm playing the breakout," or I'm playing the reversal. I like to wait. And what I mean by that is I like to wait and make sure some sort of imbalance forms. And in this situation, it's a bullish imbalance that formed. Oftentimes, you'll notice that, if I could cherry pick an example, we'll take liquidity, right, and immediately start to bounce, right? Or vice versa, take liquidity here and then immediately start to move down. And that will, to me, identify when the range is getting set. So right now we still don't have the range set in terms of this low to that high, because that's really what I'm looking at right now. So I would go from that low to this high. That was the price run that took out that high right here. So now I realistically I have to wait and see, all right, are we going to make some sort of imbalance to the downside that would kind of direct me moving forward, that we're actually going to retrace back down into discount at some point, right? And if that's the case, great. I could even look to play short. This is a pretty big range. I mean, from where we are right now at 17,000 down to what 50% would be, that's 1,500 or 1,300 points, right? It's quite a bit. So, um, but just kind of moving forward here, it is a little bit of a waiting game, which stinks. One situation, and I guess the bullish point of view I could say would be, even if it was a slight retracement back down either into this imbalance right here, or we have one more, it's very small, which we created last week here, but that would be it right there. And a lot of individual names would back that idea, where we would get a retracement into that imbalance there, before making our move, because ultimately I do believe that the draw on liquidity is 17,700. Now, if I believe that's the draw on liquidity, now what's the next step in the smaller time frame? How can we crunch that? All right, do we need to move higher at first, or are we going to start to retrace a little bit, get down and fill some of these imbalances prior to moving up to that 17,700? That's really the question, that that I need to be asking myself. And while it's still a little unclear, I wouldn't completely rule out a little bit more of a retracement, just to kick off the week. Really, I do believe on smaller time frames we have relative equal lows below this low from 2 weeks ago, which is 16,758.50. And what relative equal lows means is that we did not sweep the previous low before making that run higher. So when you get a situation like that, a lot of people would consider that to be a double bottom or something like that. But all that's really telling me is that those stops were not purged, and for price to bounce from that level, more money had to come in to kind of prop it up and push it higher. And if that's the case, now you have double the pool of liquidity down here, ready really to be deployed. So do we have enough juice to continue this move higher, or do we need to come back down and get that liquidity before making that move higher? That's really the question that I have to ask myself. And it's something that obviously with additional information, what we see when market opens back up, that will be extremely helpful. So let me pop on over here. And okay. So Luke just said, I don't think price will make a new all-time high before it retraces. I think bulls are going to get smacked hard. Market makers are going to reverse just because they know everyone is buying. Everything is overbought, in my opinion. Yeah, I mean, that's an opinion. But I think people give way too much credit to market makers, and thinking that just because a lot of people think something's going to go in one direction, that it's going to do the inverse as a result of that. I think this is really like data driven, and oftentimes you can just look to your left and a lot of the answers will be told. As you could see, I don't have a clear cut or very one-sided opinion on the matter. I'm pretty neutral at this point, while I do think we are going to that all-time high, because I feel like that is absolutely the draw on liquidity. What happens first? Do we retrace a little bit prior to going back up there? And by retracement, I don't think this is really in the cards at this exact moment, to be completely honest. Could it? Absolutely. But I don't think that's really in the cards. I think we're going to retrace into either this or that prior to making that move. I mean, maybe this would, I wouldn't really favor this all that much, but we have, that previous high here. We also have this bullish breaker, low, high, lower, low. But at this point, we're already at 50%. And then the range is set. So, I think we're moving higher. I actually think next year is going to be pretty bullish overall, to be completely honest with you. After taking out this high, do I think that there could be over the next couple months a retracement back down into here before moving up to complete the year? That's kind of exactly my game plan. But again, to trade off of that when there's still a lot of information to be processed just doesn't make all that much sense to me. So, but thank you for that question there, Luke. So let's go back over here and let's see. All right, so that's just NASDAQ in general. Let's take a look at SPY here. And I want to make sure timestamp wise where we're at. Okay, so 16:30 we have SPY. Again, if anybody has any tickers that you want to take a look at, feel free to shout them out. We'll get to them. Okay, so let me see. Yeah, there we go. That's a little better. It makes the screen a little bigger. Okay, so we'll look at SPY. All my uh, annotations are going to pop up here shortly. But when looking at SPY, to me, it's even a little bit more straightforward. To me, the all-time high is the draw on liquidity. And if that's the case, we look here and you'll notice that there's multiple bullish imbalances on this road higher right now. What we're working with at the moment is a bearish order block. So an up close candle followed by a down close that closes below the open of the previous candle. And that's kind of what we're running into right now to stall price out just a little bit. Obviously, end of year doesn't help either, but yeah, this is the all-time high. Again, to me, a sweep of that all-time high, and then from there, I'm gonna be sitting here waiting like this. Ready? What was the the start of the price run that took out those highs, and it would look something like this. I'm just throwing up this 484 just because it could be 481. It could be just a tick over that high, right? But then from there, then we can look for, a retracement at that point. What would indicate that there's going to be some sort of retracement at that point? And it would just be some sort of bearish imbalance on a weekly time frame, because that's what I'm looking at here, weekly, and that would kind of set the stage and create my bias moving forward. That's it. Simple as that. So, but of course, we have to wait because over all-time highs, I say this all the time jokingly, but I'm pretty useless above those all-time highs because the way that I go about trading, I don't use forecasts, I don't use standard deviations or anything like that to kind of project where that next move is going to be. I need information to the left, and in this situation, of course, at the all-time high, I don't have any, so I have to wait and see at that point as well. But really, in short, that's what I have on SPY. So now just to kind of go into some individual names, again, I charted a bunch of these and I want to make sure that I kind of gloss over a lot of them. But again, anybody who's listening right now, feel free just to drop in any names that you want to take a look at. So here's Tesla. It's going to boot up here in a second. Um, all right, I'm just making sure that I mark down these times so it's easier for people to go back and watch. But okay, so here's Tesla. We take a look here. Nothing has changed. I've been on this for a while. Back in November, I wanted higher, and so far so good. But yeah, nothing really has changed. This is the start of the price run that took out these highs right here to create a bullish structure. From that bullish structure, you got your first retracement here, which gave us a bounce coming from that bullish volume imbalance. I don't leave them all on because it just clogs up the chart and nobody wants to see that. So let me just zoom in and I'll make it a little more clear for you here. But there it is. Hold on. Whoops. Let me get rid of this. Okay, good. And you'll notice here your second bullish imbalance. This is the golden pocket, higher time frame liquidity sweep bounce, and so far so good. So we have 3 points of liquidity to reach to complete my model. So first would be 268.94, second 278.98, and then following that you have 299.29. Now above that 299.29, something that's pretty interesting is that we do have relative equal highs at 314.67. So if you notice this, right, not quite the same, relative equal, but we did not take out the high with this candle here. What that's telling me is whoever went short here really didn't want to get stopped out of that position and double down in a sense. So at this point, to me, there's double the pool of liquidity, which means, again, the market moves on liquidity. It needs liquidity in order to move. To me, that is, a likely draw from that point. So we'll see how it happens. I know it's far away at this point. What is it? $65. But everything sounds crazy until it actually happens. And I just go back on Twitter and I repost what I had already done. So yeah, there's Tesla. Again, one that I've been pretty interested in for a long time, but for a while there I didn't have much stake in it at all. So so yeah, that's Tesla. Now let's take a look. I know you might be saying to yourself, why would you have Upstart here? I'm currently in Upstart, that's why. Oh, cool, Lone Star. Yep. So I got Mara. We could do FedEx and Nike together for sure. Um, so let me load up this upstart here and just time wise, 2150. All right. All right. So upstart, another situation where really not much has changed. Market structure is still bullish. So from this run, this low to that high, we took out these highs over to our left, even these, but we have gotten our discount retracement down into a bullish imbalance here. And so far, so good. We bounce, right? You'll notice that we do have a pretty big bearish imbalance right here that we're working through, and we're, this is our almost now second week in a row where we've gotten up to the CE or midpoint of that bearish imbalance and have rejected it so far. So next week, more information, of course, that'll be helpful. But notice how when price got down into this midpoint of this bullish imbalance here, look what happened, right? Price got to it and bounced to close out the week. Just interesting to see. If I'm bullish next week, I want to see this kind of leave this imbalance. Doesn't need to be a huge move just yet, but would prefer it to leave that imbalance and just kind of show its hand that it does indeed want to continue moving higher. And at that point, my model would complete at 72.58. So you got some, there's definitely some space there. I want to just see, that might be, if it is at all, it's a very, very small bearish volume imbalance that you would have to contest with. But this bearish imbalance here gets filled right up to 59.51. So to me, oh my gosh, risk, high reward in that setup, and something that I'm interested in for sure. So that's upstart. Now let's just do Apple, and then we'll get to the two that Lone Star had asked for. We can pop those in. The other ones, I'm just kind of going down my list because again, I charted a bunch of names. So oh, Sean, yeah, absolutely. So Sean had asked, can you explain the picture at the top of the Upstart chart? Yeah, so that dude, I think his name is Mark Minervini. He was on he was on CNBC when Upstart was like $400, and they asked him. Yeah, let me put it back on here too. I know it might take a second to load again. Last stream with this setup, so bear with me. But this dude was on CNBC, and he's talking about Upstart, how they're crushing their position, and then the guy just asked him, or it might have been a girl actually, say, "Oh, like what do they do?" And he just like he had no idea, so he just like, "Oh, you're breaking up, I can't hear you. I don't know. And then he just shut it down. So it was kind of just like a sign of the times, I guess you could say. People didn't even consider looking into what the company actually did. There it is, 392. And then this is like just a screen grab of him while he was on there. So it was just a funny moment. This is back, geez, this is like 2 years ago. Let's just see the last time Upstart was at 392. Yeah, I mean, this is like an OG FinTwit type of moment where everybody, how they clown Kramer all the time for his stuff. Like this was one of those clown moments. So yeah, this is literally the top. 392 is when this had happened. We hadn't been there since, at the very least. Yeah, this was literally the top. That's pretty incredible. Wow, great timing by that. But yeah, no, it's just funny. It's something silly that I just keep on the chart and joke around about, because I remember I had posted this actually last year. Last year I'd done like a recap on all of these like COVID darling names that just got absolutely smoked. So having him on the chart look down was pretty funny. But yeah, so that's that was that situation, Sean. Um, but anyways, let's pop over here to Apple. So Apple, here we go. Uh, Apple, believe it or not, doesn't look as great as a lot of the other names, but still, again, not gonna count it out. So here's the completion of my model. So you have your low, high, retracement into discount, bullish imbalance, check, and run for the high right here. Once we took that high, so far we've actually, last week or 2 weeks ago at this point, we made a bearish imbalance to the downside. With that, does that mean the range is set? Could be, maybe not. We do still have this bullish volume imbalance, which we held multiple times last time we encountered it, which was early December. We also have this bullish imbalance that is yet to be completely filled. This chart in itself actually kind of leads me to, I guess a point that I wanted to make. But ironically, a lot of the IWM names are the, just kind of off that, whatever they call it now, the Magnificent Seven. A lot of the names off of that are, to me, that I like a retracement on them would not surprise me whatsoever. And a lot of those other names I think can pick up some serious steam. So look, if these don't hold on Apple, then my expectation would be price retrace back down into this bullish breaker, low, high, lower low, and upon break, we would expect this candle to act as a support level. So there's support and discount. It's just at this point, again, if I was looking at this on like a 5-minute chart and this was the exact setup, I would not be looking to, take longs up here. Could it still go higher? Yeah, absolutely. But think about what your risk reward is if you're buying your calls in premium or over 50% of a range. You're overpaying essentially. If fair value of this range is 182.65 and you're buying calls at 192, you're technically overpaying. So that's why I avoid that. Really, I mean, look, could price get into one of these and take off for another leg higher? Absolutely. I'm not, saying that it can't do that. It's just not something that me, as the trader would really prefer to do. Just it's enhancing your risk, right? You're buying it at 192. If you could see a potential retracement to 182, this trade really doesn't go to the garbage can until 165. And if that's the case, you're now risking about 30 points for a potential what? I mean, over this high again, you're at all-time highs. Who knows? So just way too much risk in my opinion on something like this. Again, on a shorter term time frame. If you're looking for a bounce here, on this higher time frame to go higher, could it happen? Absolutely. I'm not saying that it can't happen, but just not something I would be interested in. So okay, so let's take a look over here. And Lone Star had asked for. We'll circle back to Mara at the end because I have that one in the list of things that I want to do. So I guess let's throw on FedEx. I don't think I've ever looked at this one really, but we'll throw it up here. So if FedEx is at 29 minutes, good. Okay. Again, I'm just doing this so it's easier for people to go back and look later. But here's the FedEx weekly. Anybody who's here for the first time, thanks for popping on. I've been doing these a lot more recently. I think it's just super easy to do with StreamYard, and it's good because a lot of people in the group, whether the calls are at 8 o'clock at night or they just can't make it that late, or they're tired or they're lazy, which is also a possibility. It's just nice to have it, open for everybody. So, okay. So this is actually a pretty interesting set. So if we were to take a look, let's just look, we'll go short term and then we'll break it out to the higher time frame. In terms of like a higher time horizon, really just look back in time. But just on this most immediate price run, here's one thing that you're going to notice. Okay, what was the price run that took out that high here? It was that price run there. Okay, so we'll walk through this brick by brick. Ready? So I like to use the green candle. Can you use the black? I'm sure you can. But I used the start of that bullish price run to really get it off. Come on, what are we doing? Here we go. This is Mac problems here. But rectangle, okay, so here's your low to your, and that's my rectangle, not my fib. Okay, that's great. But here's my fib. Again, I'm not a fib trader. I just use it to map the range. So here's that, bingo. That was the price run that took out this high right here. Here's your first little retracement. You'll notice price got up to it and didn't take it out. What does that mean for us? Relative equal highs. Price is likely to run back up higher. And here's a perfect example of it. What happened here? How did price bounce here? Well, you can look at it from two perspectives. One, you have a bullish imbalance right here in which those weekly candles never released from, or never left, right? Here we go, rectangle right here. So that would be the bullish imbalance. Here we go again. All right, it'll boot up in a sec. But we never lost that bullish imbalance. And also there is a bullish order block. There it is right here. So down close candle followed by an up close candle that closes above the previous open. And there it is. So you'll notice there's your retracement, there's your hold. The bearish order block would look the length of this candle. I don't want to put it on. It's just too much clogging, but there's your run. Bingo. Okay. So from this point, my model is complete. There it is. There's it. That's in action, right? So now from this point, here we go. Bingo. And boom. Okay. So I know this was an earnings move. It smoked, right? After taking out that high, there's your retracement into discount of a bullish price range. Do we have any bullish imbalances here? I'm going to remove this one just for a second so it's a little more clear. But here it is. Ready? Boom. It's going to buffer again. Stupid thing. There it is. Okay, good. Boom, boom. Okay, so if you look at this candle up close, you'll see no wicks on either side of the candle. Price retraces into it perfectly, and so far so good. Now, there is a bearish imbalance here. Could it take time to make that run back up for highs? Absolutely. Let's just see one thing, and this is very important for anybody who's listening that has been following my model or they're interested in learning how to use it. Here's something that is very important in terms of just when would be the best time to use my model versus when would not be the best time to use my model. And because if my model were to work every single time, price would only go in one direction, because all we'd be looking for is a bullish market structure shift, retracement lower into discount, bullish imbalance and discount, and take off for the highs. And it would continue doing that over and over and over and over again, right? So we know at some point it doesn't work. When doesn't it work? To me, just from, again, back testing it, you guys can look to it as well. But it is very interesting to see that when we take out higher time frame liquidity, that typically will lead to reversals, right? So I'm not saying that this might not play out perfectly and continue higher, but just know that what's really your risk on this trade if you were to look for the upside, right? And look, that's a bearish imbalance. That's your buy side liquidity. Look how perfect that rejection is, right? You can't make it up. So if we zoom in here and we go a little lower, and we'll notice, okay, so look, price held here. That's great. We actually gapped higher, so that's pretty enticing. This candle gapped higher, right? If it didn't gap higher, it would have opened up right here, right? So we did end up gapping higher above 50% of this bullish imbalance, and we're slowly starting to leave it, right? So really, what would be like if I were to take this trade, what would be my breakdown on it? And for me, it's just, okay, a break of this low at any point, 242.24, I'm done, right? Why am I done? This is the candle that created the imbalance to the upside. Yes, it's below where the imbalance is, but you'll notice that a lot of the time you'll get the wicks here. And as long as the wicks don't take out that low, I'm chilling. And then I'd look for the upside of 285.53, which would complete my model in this situation. And if that were to be the case, then great. That's awesome. And then I would just do the same thing again. Move that low to here, take this high to the next high, and see where we're at. See if we've taken out any higher time frame liquidity. But it's very nice in terms of how it maps out the trade as a whole. And that's really why I've gravitated towards it, right? So okay, that's FedEx. Thanks again. I'm just seeing Dr. Manhattan. Thanks again for the live. Would love to hear your take on ExxonMobil. See if it matches my thesis. Yeah, we could look at that one too. Let's just do Nike real quick for Lone Star, and then we'll pop over to ExxonMobil. I actually didn't chart ExxonMobil. I usually look at just CL, or I like Oxy and CVX. But all right, so let's go over and let's type in Nike. Okay. Got that new keyboard clacking around. There it is. Okay, so Nike. And let's just look at the timestamp on this so I can make sure of it. 35:45. Okay. Nike. All right, cool. Again, if anybody else wants any, just throw them out there. If not, I'm just going to go through every one that I did if nobody has any other names. So okay. So we can look at this on a short-term perspective. We could also look at it from a long-term perspective. So I guess that's the way that the Furus on here get away with it, giving out like terrible takes and then just pretending that they never did, because they can just literally say both. There's always a bull and bear case. So if you take a look, where do we reject? Right off the midpoint. See how important that midpoint is? It's amazing. Bodies respect that, reject from that point. But at this point, look, we can look at it like this. Okay, well, we have a bearish market structure, right? We took out multiple lows in the process on this run down to the low, right? No 50% retracement there. So my low ain't till here. Okay. We get right up into the perfect optimal short entry in terms of your bearish setup, right? Now let's look at one thing. Did we take out higher time frame liquidity on this move? Not necessarily. No, we didn't. Okay. But look, we could also look at it from this perspective. And again, this is the just being a devil's advocate. Look at that price run that took out these highs right here. Oh, wow. So it's a bearish setup or a bullish setup inside a bearish setup inside a higher time frame bullish setup inside a higher time frame bearish setup, right? Everything is fractal in terms of the market. It's amazing. And when you look at it from that perspective, to me, I think it helps out because you can really, kind of have an idea based on just time. What's your time horizon for the trade? Is it a short-term trade? Is it a longer, term swing, or is it something that you just want to buy and hold forever? It's just there's a ton of different perspectives you can look for. So, but if you look from this bullish perspective here, the draw on liquidity would be here at 131.21, right? If you look at a shorter term bearish perspective, this is a, a spot where bears really needed to defend. And I know they did, which is good. But if we look at this most recent price run, okay, what was the run that took out these highs right here? Ready? Let's go from this start of the run, this green candle right there, to the high. Look where we are, right at 79% and right at, come on, give me the box. There it is. Bang. Check that. Come on, man. You can't make that up. That's crazy, right? So really the only way I look at this is because is it going to be the higher time frame that plays out? Is it going to be the intermediate time frame that plays out? Is it going to be the smaller time frame that plays out? That's a great question. But I guess the way that I look at it really in short is just uh, if I can come up with whatever thesis, right? This is a name where it might not be as clearly, right? I'm giving you three different things, but it's an instance where it's not as clear. So if it's not as clear like that, all you just have to consider to yourself is how am I going to manage this thing in a way where even if I'm wrong, it's not killing me, right? And really, in this situation, losing 104.18, which is this low, to me that would be a bearish market structure shift, right? Taking out the low that started the price run, right? If that were the case, the trade's over. But by holding at this point, this is either A, the best long or the quickest stop out of your life. Like that's the way I look at a lot of these trades. So I don't mind being wrong as long as I have well-defined risk and I'm not going to get absolutely crushed by what the downside potential could be in a situation, right? So from this point here, I mean, look, your upside or your bullish price target is, the high 123.39 and ultimately 131.31, right? But if you look at it from the bearish perspective, what is your all I guess stop for your long in this situation? For me it would be 104.18. Goes below there, it's toast. So you're really risking about $4 to make what 15. I mean, does that make sense to you? Everybody's different, so it might be doesn't necessarily have to be one size fits all at all. So hopefully that was a little insightful on Nike. One sec, hold on. What's up, buddy? All right, so here. All right, so now what was that other name that we were going to take a look at here? Baba, yeah, I charted Baba too. We can look at that for sure. So let's just see ExxonMobil. Okay, cool. So ExxonMobil, that's at 40 minutes, 30 seconds. Cool. All right, let me pop that over. My chart might be nasty. I haven't charted in a long time, but Steve, we'll get to Baba in a second. You got it. All right. So let's pop over here. Let's type in ExxonMobil. I can't wait to be streaming on this new computer. It's going to be smooth. It's going to be, I'm not going to have to worry about this crapping out on me. So Katie had just replied to his SPY idea. Katie's in the group with us. He said, see an inside year close. Higher time frame resting liquidity favors upside, in my opinion. Smaller time frame SPY pullback is DXY catching bids and squeezing late bear chasers. Bullishness until higher time frame taken out, indicative by two sizable bullish volume imbalances, filling a previous bearish imbalance. Yeah, pretty much exactly what now I'm thinking of what I stated earlier on here. So yeah, so as you can see, this is a really destructive chart. But here's your bounce from whenever I had charted that. And there's your turtle soup. Here's your first rejection. But you'll notice that it's just sloppy. All energy names. If I were to show you CL or Oxy or anything like that, they all look like garbage, to be honest. So but okay, so let's take a look at ExxonMobil. And I'm not saying garbage is in bad, like they're going to go down or anything like that. I'm not saying that at all. I'm just saying that the price action has not been smooth. So, okay, here's your first little run here. Bingo. Okay, so first run, there's my model, right? Why didn't I use this high right here? The reason I didn't use that high, we never retraced to 50%. So if we don't retrace to 50%, to me, the range ain't set. So if the range ain't set, that is A-okay. There's your retracement into bullish order block and take off. Took out the high right there. So from that point, I would go like this. Boom, boom. Okay, there's your retracement into a discount bullish imbalance. There's my model completion. Check. Again, sloppy, sloppy, sloppy. And then here's your most recent. So now here's your high move that took out the highs. There's your sweep of the low. So this is where it gets a little tricky. And this is kind of scary just on a broader economic standpoint where ExxonMobil's chart might not look all that great, might look bearish. And if that were to be the case, that could spell like recession. So it's not all that good. So just from this perspective, the fact that we've taken out these lows here, we took out that low as well. I would have my high to low set like this. Do I know this is the low yet? Not necessarily. I like to wait for a retracement into the discount imbalance. One thing of note here is that we do have a bearish imbalance in that discount area that we would like, but it's already been pretty much filled, right? So if you take a look here, there's your wick to cause that next leg down and rejection. So with that being said, I wouldn't rule out some sort of bounce on ExxonMobil or energy as a whole, really, especially to sweep that high. But nothing really would change for me in terms of what my stance on it is until a move over 120. And then I would just say, okay, I'm wrong. So whether this is the low or whether it's not, this also looks pretty enticing. Unfilled bullish volume imbalance down here. Does it have to happen immediately? No. Could we pop back up to here, then reject down into here, and then from this point take off and move higher? Very possible. But again, could we bounce from here? I don't like the way that it closed, to be honest, on the weekly. The fact that it overlaid this bullish volume imbalance right here, right? So overlaying that, to me, it's not really showing me a sign that it wants to move higher into this bearish imbalance and ultimately fill it. So I guess I'm indifferent. Like on a higher time frame, I'm not very bullish on energy, but on a smaller time frame, could there be a potential for a bounce? About $15, sure. So I guess that I hope that helped there, Dr. Manhattan. So let's see what else. What else do we got? There was another one that somebody just asked for. Oh, Baba. Yeah, we could look at Baba for sure. I think it's Guy. You just asked about Upstart. We actually went over Upstart a little while ago. So, at the end of this stream, I don't know if you can go back on it right now, but if you go back to the 21-minute mark, you'll see us. That's where we started the Upstart talk. So, all right. So now, what was that last name? Baba, right? Okay. So let's flick on over to Baba. I want to just make sure that I have 45. Okay, 45. We'll do it for Baba. Yeah, it's interesting to see that a lot of these Chinese names are starting to get some interest again because I actually like Baidu too. Baidu is another one, BIDU, an AI type Chinese name, but that's one that I'm already in. So, but Baba as well. To me, like low risk, high reward type of situation here. And you'll see I have my annotations on it already, but Let's see, we're loading up here. Mm, I'd anticipated getting in Baba, but I liked Baidu a little better, and that's why I did. And I just had this set so I know, because it would be for a longer time frame type trade. So I had this set for, all right, I lose. And the reason why I lose here is just that candle that created the imbalance. We lose that, and then to me, it's pretty toast. Um, but yeah, look, I mean, look, low to high, retracement back down. Here's your lowest discount bullish imbalance. Check. Now we start this move higher. Yeah, I mean, it's pretty solid in my opinion. My model would complete on Baba at 120, 130, so pretty far away. This reminds me of the AMD, and we'll look at AMD next because it mirrors it in terms of when I had identified AMD as a potential long situation at like $90, and I think we're at like 140 right now. So yeah, it's pretty sweet setup on Baba, and really your risk is not all that much in terms of what your possible make could be. So let me just I'll just pivot over to AMD and show you what I mean by that right here. So let me just again do the time. So 48 minutes we're going over. Yeah, we could look at Palantir too. I did that one. So here's 48 AMD. Good. Okay. So it's booting up now, but you'll notice that there are similarities in this situation. Okay. So yep. Here it is. So check this, how it was your low, high, retracement back down into a bullish imbalance here at $94. Right? I didn't get in until about 95, but $94. I was a little late, but we ran up to the highs, which completed at 132. And so far, so good. We made that bullish imbalance up through previous buy side liquidity, which is pretty encouraging. But one thing on AMD, I'm pretty sure we ran into some sort of bearish imbalance. Oh, we're above it. Wow. Okay. So the fact that we closed above this bearish imbalance, to me, 156, pretty solid. 164. So maybe see some strength in semis to kick off the year. But here's what I'm talking about. Just like Baba, it was the lowest of the low that it took for that run higher. This is a bullish breaker right here. I know it's far away at this point, but yeah, previous buy side liquidity at 132.83 on AMD. But yeah, I don't know why. Like it just maybe it was because the size of the range, like what AMD's was, where it was like a 40-point win on a potential 10-point loss or risk. So um, so yeah, there's AMD. That was just another one that I wanted to take a look at. I guess pivoting from AMD, we could look at Nvidia because it's very similar. That we do have upside liquidity that I think is the draw more than what's up, man? KD, how you doing? Yeah, no, I just figured I'd do one more live for the year and then call it quits. I'm getting that new computer next week, so I'll be much more happy to do live streams. I just hate when it like takes forever to load up and stuff. And really this is the only reason, because when I'm doing whatever I got to do on the computer, it's perfectly fine, this MacBook. Um but let's do Nvidia, then we'll go to Palantir and Pepsi. um I'm just thinking do it this way so it's quicker. 50 20 on for Nvidia. Cool. Okay, so if we take a look at Nvidia, a much tighter range here, but here I actually I shouldn't even say that. Tighter in terms of Nvidia, the dollar amount is pretty big still. But so from your low to your high, this is your higher time frame liquidity sweep, and where my model would complete, there's your bullish imbalance that it bounced off of. Sweep liquidity at what was it, 502 at this point. So to me, 505.48 the draw on liquidity. Again, if we look left, this is at all-time highs. So above the all-time highs, I'm kind of useless. I need the information to the left to help me continue in making decisions, which I don't have in this particular instance. Last week, I was curious to see if we would get into this bullish imbalance prior to making the move higher, but so far so good. We actually did make a little gap higher on the weekly, very slim, about 3 points on that Monday gap higher. But yeah, I think that's probably the area to go. So here's the tricky one. with Nvidia because it actually didn't get to 50%. It's so close. This is a bullish volume imbalance right here. Got to the bottom of it, but not quite 50% before making that run up to that 505 mark. So we'll see. If we are to take 505, I would not be sliding my low to here because the range was never set. So I would just be looking to do something like that, where whatever the new high would be, I'd move it that way. So that's Nvidia for me. Now Palantir. Let's look at Palantir. Here we go. Palantir is another tricky one. Actually, I wouldn't say tricky. It's pretty well defined. It's just annoying, I guess, would be a better way to put it. Because there's absolutely a bullish setup there, but I could totally see the bearish perspective, and when that happens, I do not like it. I don't typically trade those. So 52.15, we'll do Palantir. Okay. All right. So Palantir, let's take a look. You'll notice here, my model had just completed actually from this low to high, retracement into your discount bullish imbalance, check, run for the high, donezo. Now from that point, you'll see when this loads up where I have my fib set at the moment. And we're currently in the prime zone for my model to take place. But here's the catch. Not only did we take out higher time frame liquidity and get into this bearish imbalance on the weekly time frame, but we also have relative equal lows below us at 1368, which is kind of terrifying to me. And that's why it was one where I bought in over here. And last week, I cut most of my position at that point. And the reason for that was we're getting sticky in this bullish imbalance here. And I don't like that. I want price to get in here and take off. Think about it. If we're using the term imbalance, right? The more time price stays inside that imbalance, what is it doing? It's balancing price out. So if price is getting balanced out in this range, I really don't want to be a part of it, specifically because we have relative equal lows. So check that low, 1368, check that low, 1368. It's the same. So whoever went long at this point to drive price here went long again without getting stop loss rated and pushed price up, $8. So just it stinks. Again, I may have cut it too soon. If that's the case, so be it. I ended up making like nothing, but it's better than potential loss, and that's fine by me. I wanted this candle to build some steam for it to start moving higher. But in this situation, of course, the risk reward still not terribly bad. I mean, really, the low of that imbalance is at 1693. With a high of 21.85, so a $5 reward for what would be your risk in that situation, and it's really about $2. Sweeping that low to me would imply that 1368 is probably going to happen quicker than not. So hopefully that was helpful on Palantir. Palantir to 200. I like Palantir. And that's why, like when I said I cut most of my position, it's just one that I like to hold. Period. So I added more on that most recent pullback. But again, it's just getting a little too sticky for me. I sold a lot here, and that's just kind of how I manage a lot of the long-term positions where when, let's say, for example, we completed my model, at that point, I'll cut off a lot of shares in anticipation for some sort of retracement lower where I can re-add and look for higher. And then I get into a situation where I am here and price is getting balanced within this range. I don't really want to be a part of that just because we have relative equal lows below. If we didn't have those relative equal lows, I would not think twice about this. Still have the same stop loss, everything like that, no problem. Still look at the same target, but just the fact that it's just sketchy to me that we'd have those there. So even in this, look at this. I mean, it's a little bit lower, but this is, again, another situation where we came all the way back down here, but we didn't get stopped out of our position. It just gets sketchy after a while, and that's a lot of liquidity. Maybe that move down to that 1368 is the one that's necessary for the real move higher. Because, again, the market needs liquidity in order to move. If there's no liquidity, then it ain't happening. So yeah, there's Palantir. But I just saw for AI is another one that I've been in. So AI is at 55 minutes, 59 seconds. Okay, so here's AI. Still not much has changed. We've really gotten sticky over the last couple of weeks, which stinks, but that's okay. But you'll notice when the notations pop up, you'll see that my model's still intact, where we have our low, high, retracement back down into discount, and now I'm anticipating that move higher. That's why I've been holding on to AI for some time. You'll notice even on that wick right here, that earnings candle. This is why I was in the trade. I've been in the trade for a while, actually. Probably, I don't want to say too long. It is what it is. I don't mind. I like it to hold on to. But check that. Like, that is just perfect. Look at that. 50% of the bullish imbalance. Bing. Takes back off. I don't know why my stuff ain't loading right now. It should be. But here is, let me just throw these on just so you could see it until it loads, if it's going to load at all. Give me the fibs. Oh, there it is. See, I knew it was coming. So there it is. That was the initial tweet. So risking $1 for potential $8. There it is at 23. We did get up to 32. While some of mine are off, and I'll show you where I had done it on the daily time frame. So let's see over here, and we'll go to AI, and you'll just see on the daily how I have it all structured. So here's your AI daily chart. Fill the imbalance down here at, and this is an even smaller type range for my model. Low to high, that took out these, retracement back down lower. So you can use multiple different time frames, of course, but did I get rid of the places where I had it? I did. I just have target 3, I think. Yeah, there's T3. It seems like a reach, seems crazy, but I actually think these names are going to do well next year. So, but I'm target 1 and 2 have already reached, so I'm kind of just holding on to whatever I got left for potential run to complete my model up to 48. So, so yeah, so there's AI. You got it. Okay, so can you look at JNJ? All right, let's look at JNJ. I'm not so sure I have this one charted out at all, but we can. Okay, JNJ. Okay, just loading up now. I want to make sure I have timestamps on this sucker too. So JNJ at about 59 minutes. Okay. All right, so JNJ, let's see. You're saying it's undervalued, I guess, in terms of the financials and all that stuff. So we could look at it from that point of view. All right, of course, we're taking a while to load because this computer is toast. Can't wait. I think it's coming on Wednesday. Okay, so JNJ. All right, let's see. Right now we're running into the bearish breaker. So you have your high, low, higher high. Here's your bearish breaker. We actually rejected it once already. I definitely don't have it charted, so that's good. We can mark this up. There we go. Use the little rectangle tool. So, oh, no, wrong one. Whoops, there it is. There's your bearish breaker. So high, low, higher high, break through that, and we would anticipate this being a breaker candle. You also notice here we had relative equal lows, right? Again, that's like the Palantir situation where it's like, it's just sketchy, right? It's hard to feel confident about that next run up with those relative equal lows just chilling down there. But there's your move lower. Here's your breaker rejection so far, and so far holding it. This bullish imbalance held right here. So hold on, it's buffering again. It's stupid. But we'll look at it a little bit more. You have a couple volume imbalances above bearish. So here's let's kick it in. Hold on. Come on, give me the rectangle. Thank you. Okay, so here it is. That would be a bearish volume imbalance right there. It's not going to give me the colors, I guess, so that's quite annoying. And now let's see. Yeah, this is starting to chop out, but and that's another. These should be red. I don't know why it's not popping up with the color option for me. Ready? There. Change it to red. Okay. Thank you. And here's another one that should be red indeed. Oh, there it is. Okay, coming up again. So those would be a couple bearish volume imbalances. This should be black because I used my breakers. I put them in black. We did take out this little short-term high. So if you want to look at it from a really tight point of view, I guess, a way to look at it would be from the low to the high that set up this run. We did get into a discount bullish imbalance right here. Give me the rectangle. Thank you. So that's what that would look like on this run higher, right? You also have a bearish volume imbalance here. I know there's just a lot going on here on this one. There's that. Good. Okay, so even if we were to remove the breaker just for a second and see, check that, not bad. So yeah, I mean, at this point, you take out 160, you can start to make some progress to the upside. Really, until let me see this actually. Let's go the higher, more of a time horizon in terms of the range. Yeah, so we still haven't gotten to 50. So I think you might be honest on KD, even if you get a run up into here. And then from this point, we'll see. But nothing really changes for me at this point until 175.97 is taken out. If that were to happen, then you get a bullish market structure shift. You might say, okay, why is this rejecting here, Mando? What's going on? Hold on, I'll show you. Okay, rectangle, thank you. Every move is justified. Like I say this all the time, but I'm just trying to echo it and tell you that if you look left and you have information to your left, you can justify every single move that happens on this chart. Here's your higher time frame liquidity sweep. That's actually something worth noting for the upside trade, KD. That's pretty promising. Let's just keep looking for more. Why do we bounce here? Okay, not only did we take liquidity, but check this. Boom, boom. Bullish imbalance right here. There it is, right? So again, you can always justify any move that happens in the chart. And if you can't, let's say on a weekly chart, there's one move where we're just like, where the heck did this come from? It doesn't make sense. I can guarantee you, if you go down to a daily time frame, 4 hour, hourly, you name it, you're gonna be able to find something, right? In this situation here, what was this rejection? Ready? Bearish imbalance right there. See that? Right? Now, okay, price retraces back up. Okay, you could say, oh, bearish imbalance again. How do I know? Well, you also have a bearish order block here, right? Up close candle followed by a down close candle. So it would make sense. Why did price bounce here? Bullish imbalance right here. See what I'm saying? Like it's just too precise. There's no way around it. That's why when I see a lot of other people on here doing all these like funky things, I'm just like, it's just so unnecessary, really. But yeah, so that's that. That would be Johnson & Johnson. Let's see. Look at monthly on Johnson & Johnson. Okay, we could do that. The annotations are going to be a little sloppy now, but okay. So monthly, yeah, still not bad. Price run that took out these highs, low to our high, retracement into discount. I bet you if we were to throw this on, yeah, I don't hate the upside at all, KD. Already, what was the price run that took out those highs? Ready? Come on, give me the fib. There it is. Okay, no retracement, no retracement. There it is. Bang. Check that. That's something. So you have that bullish volume imbalance that we got into here on the monthly, and since then, off to the races. So really, yeah, your risk reward here is not bad at all. When would market structure on the smaller time frame shift back? It's just a move over this high right here because that was the most recent bearish price run, but we did take out higher time frame liquidity after doing that. So that's pretty good. That ain't a bad look there, Katie, at all. I know that's one that you're probably into. But what else? Let's see. If anybody else has any other names, feel free to throw them out. If not, I'm just going to go what I've just been kind of running up and down the list right now. JNJ ain't bad, Kevin. That's solid. I'm going to take a screenshot of this one. I got a bunch. I'm pretty much posting all these charts, so that's fine. Where were we? Where did we leave off, I guess? I'm just gonna try and pick out some more enticing memes. Okay, Disney's one actually. So a couple weeks ago, I was like, Disney, please give me a chance at 87. We didn't get it yet, but I think we're gonna get it at 87. And then I kind of drew like a potential forecast. This is the monthly. Let's go back to the weekly. But so let's just see time wise. What are we at? 106. Okay, 106 on Disney. Just easier for everybody to see when I post them like that. Okay, let's come back over here. Spy. So SEC the bag. We did Spy. When this is over, I'm sure you can go back in. I don't know if you can do it right now, but if you could, um, you can do it now. But after this ends, this will be on YouTube, so you can check it out. But it was the second name. It starts at 16 minutes in. You'll see where we did it. So. But we're just loading up Disney now. It's just taking forever. Da, da, da. Okay, so here we go. Weekly's pumping now. The little notes on it are gonna pop up. Yeah, no worries, man. So with my restructuring, I'm moving it to some new names. Yeah, I don't blame you. Going to next year. Yeah, you got it. Oh, I can't wait to get this new computer. It's like the fifth time I've said it, but nothing has changed here just yet. We'll take a look at Disney though, and you'll see. Oh wow, Braves just got Chris Sale. Damn, he's a little old though, but anyways, let's go. Come on, let's get this going here. Okay, there it is. Great. All right, don't crap out on me yet. Don't do it. Okay, so this is the type of move I'm anticipating on Disney. So just going back in time, back on October 4th, when we took out the COVID low, I said bouncy time, and bouncy time indeed. So far, we went up to $96. But yeah, if I can get an opportunity down here at like 86, like the risk reward here is so good, in my opinion. 85.93 being the low, that would complete my model in this situation. You also have a bullish breaker here. So that's just another way you can look at it. You know, there's two layers of confluence, I guess you could say, in terms of that higher move from that point. And then to me, the drawn liquidity would be 103.91. So 80, 87, whatever, 80, 86, 87 to 103. It's pretty good. So that's why I like Disney. I just, I need it to get down here. I'm not jumping the gun on this. There's no point. All you're doing is just adding more potential risk to what your trade could be by doing that. So that's Disney. Yeah, TSCO. Okay, I don't really know what this is, but we can definitely we'll look at that. And then while we do that, I want to see what. Okay, so 110. I like how we can rattle these off pretty quickly too. All right, we're loading up. I'm looking in the comments right now. Yeah, a lot of people are really bearish. I don't know. I don't know about that. Not yet. All right. Come on, let's go. Load this sucker up, man. You see, it just gets to a certain point where it's just, I don't know if it's too much for the old computer or what, but I even unplugged the monitors and stuff because I thought that might have been the problem. Might have been just too much. Let's let this boot up. And we'll do Mara as well. We'll do that one next because I know it was asked before. I was just going to go down in the list of stuff, but come on. We're loading. I don't know. What is TSCO there, KD? Peep my comments. Yeah, I read them out actually, Kevin. It pretty much lined up with what I was thinking too. Ultimate draw being that all-time high, and then in the meantime, could be a little choppy to get us there, but and then from that point, do we make an imbalance higher? Do we not? All right, here we go. Finally, Tractor Supply Company. Okay, and this is 111.30. Okay, timestamp and everything, of course. Man, just load already. I got the fan. WY trend is your friend. I'm not really sure what that's for. I think Kyle might be in here. Okay. Oh boy, it's taking forever. What else we got here in the meantime we can look at? Oh, Pepsi. Sorry, Siva. We can check out Pepsi too. I missed that one. So we'll go Pepsi Mara, and then if we don't start to speed this computer up, then we're good. I'm done. Come on, let's go. All this for damn Tractor Supply, Katie. It better be good. It's got to be loading the hits here. We can look at it from a different perspective. If that window is just shot, yeah, this one seems to be loading quicker. We'll see. Whichever one gets hit first, we're gonna go to. Aha! Now, put a little pressure on it. Took off. Okay, so Tractor Supply here. Okay. Volume imbalance right here. You see that gap up? Bingo. There's your bounce. So far, so good. Okay, so with that, you have this bearish imbalance. Oh, no, I'm sorry. No, you don't. You're over it, and you actually held the previous. So that's a nice little inverse there. Tractor Supply ain't bad, man. Check that. So ready, here's one imbalance there. That's bullish. Here's another bullish imbalance right here. We just held on to it, and you actually left it. So that's what, again, looking at Upstart earlier, that's what I wanted to see on that. It start to show me it wanted to move higher. The draw on liquidity would be here, 230.79, and at that point you have a pretty big bearish imbalance, also bearish volume imbalance. I'm gonna just conjoin them in this situation. There it is. So you have your bearish volume imbalance, and you also have a bearish fair value gap right here. Up above that, you have this. So let's click around. Let's mess around with this a little bit. So did we take out that high? No, we didn't. So what was the price run that started everything that really took out any high in this situation? So it's really, I mean, if you want to go from the ultimate low to that high and just kind of see where we're at. So here's low to your high, 79%. Not bad. There's your bullish imbalance down there in discount. I'll just mark it just because. There it is. Bingo. There's your bullish imbalance and discount. And yeah. Oh, KD, look at that. Bounced off 50%. Low of last week was off that 50%. Dang. So 251 is the ultimate terminus location for this. Wow. That's a good eye too. KD, you're on it, man. Sheesh. That's 2 good ones in a row. So yeah, there's Tractor Supply. Let me just look over and see. Oh, haha, Seeker. Yeah, no, I've been talking about it a little bit. It's Wednesday. I think it's coming Wednesday or Thursday of next week. So yeah, I got the new keyboard. You can hear the clacking around in here. Tesla, a bait trader. We did Tesla already. If you go back in time, it's at 19 minutes. That was when we did that one. So riding around in my tractor in 2024. I'm riding around in my Tesla. So I like Tesla. And we could see, okay. Yeah, I could use SE, but let me do Mara first. Somebody had asked for Mara a while ago, and I was kind of going in order at that point. So, and also I got to show you guys Shopify. SoFi is almost done. The 1130 is the high that I'm looking for, but yeah, Shopify. It's not quite where I want it yet, but I think it's going to be a killer. So let's see. Mara's at 116. Tractor Supply 116 is Mara. All right, so here's Mara. The levels and stuff are going to load up, and then we'll look at SE. That's one. It's becoming more popular again. That one was really popular during COVID. Let me see. Okay, sorry I had to answer that. Good. All right, so if we look at Mara, obviously I'm going to circle back because I nailed it, but please tell me you see it. So if we just erase everything just to there, what do you see in this situation? You see a bullish price run taking out multiple highs in the situation, a retracement back down into a discount, bullish imbalance right here, and then there's your run. So my model is complete on Mara at 1988. Now I'm waiting to see, is this the range setter? If this is the range setter, all I would do is just move this to there and that to the high. Getting back down to 19, does it have to happen next week? No. But at what point? I would love that actually. But this could very well still continue to run higher. 32.74 is that draw on liquidity. Just came up short. Body couldn't close above this bearish imbalance right here, dating back to April of 2022. So Mara's pretty sick. I know we have Captain Mara in the group. He's a big supporter of the company. He likes it a lot, and that's beyond obviously the candlesticks. But yeah, Mara's pretty sweet. So from this point, I still have my shares. I don't think it's coming back down here again. So yeah. So let's look at SE. SE is the next one. Okay, come on, load up, and then I'll take a peek and see if anybody else has any others. You got it, man. We'll do SE right now though. So SEC Limited. Yeah, this is a big time one a couple years ago. Everybody loved that. And what time is this in the stream? 118.43. Okay, so 118.43. SE. Yeah, this is a popular one. I'm surprised no one's asked me about Neo yet. That seems to be the one that literally everybody wants to talk about right now. Okay, so here comes the slow motion load. Let's put a little pressure on it here. Let's see. And this is just how I do it. I go weekly, daily, hourly, and then these are my two like day trading templates. Come on, load it. There it is. Okay, I definitely don't have this one charted, but right off the bat, I see that we took out higher time frame liquidity right here, below 40. So you see that sweep, and so far we're kind of consolidating. Haven't done much of anything just yet, but did we take that? Yeah, we did. So check that. We took out the COVID lows. Dang, who found this? It's just like Pfizer. Pfizer took out the COVID low too. Those are interesting to me because we saw what Disney did after taking out that COVID low. Dang, yeah, this is solid. It's like what the risk reward in it is. Just to me, it makes sense for me. It might not make sense for anybody else, but okay. So let's just at least be fair. That's a what the hell is that? This should be it's white. Whoops. Let's go red. Bearish imbalance right here. Okay, just worth noting. Okay, but actually, let me put the bearish levels on first, just to be fair. So this is a bearish fair value gap. Also, you have a bearish volume imbalance right there. Okay, so there are bearish levels that you got to take care of, but let's take this right here, that low. That's also another fair value gap. So you do have some work cut out for you, but worth noting here, you have a high, low, higher high, break of that low, retracement into it, bearish breaker, rejection. Okay, from this point, right, we took out the COVID low, so that's higher time frame liquidity breach. That's a good thing. Those higher time frame liquidity tends to lead to reversals, right? But in this situation right here, if we look on the weekly, and I know it's going to look tight, but we've made a low, high, lower low, and so far we moved above that high. That would be a bullish breaker, right? So again, really, it's just mapping like what your downside risk would be. The bullish draw on liquidity here is $48, and then from there you have, and again, this is a weekly chart, could take forever to get here, um, but yeah, so far so good. So if you take out that 48, then you set up a bullish trend, I guess you could say, because technically this is still bearish, right? The only reason why I'm thinking about the bull side to this is because we did take out that higher time frame liquidity, right? So yeah, so far so good. I think the risk reward on this one is really solid, actually. Um, I'm just gonna mark this up. I'll post this one too. That's a good find, man. And also, I know it's really far away, but you have relative equal highs right here at 88. Where is and that was Bay, right? Bay Trader. Nice job, man. That was a good eye. See, like when I do these, like a lot of times people pick up on really good ones. Like somebody picked up Upstart for me, or they I guess rang the bell. Obviously, I didn't just follow anybody blindly. I looked at it myself. But let me just write COVID lows swept. Worth it. Worth noting. Okay, so from this point here, bingo. Okay, now screen grab. Beautiful. I have like 45 charts coming out of the next 3 days. I'll type them up. All right, yeah. So that's a good one. Good eye for sure, man. Yeah, no worries, Katie. I'll see you, man. Can you look at Visa if you get a chance? Yeah, I'll do Visa for sure. All right, so V is another one that we could pop in on right now. Let me come on down, go back. So 123, we're gonna look at Visa. Okay. All right, it's coming. Nice, there we go. All right. I'll do a couple more and then I'll pop out of here. But if you have any more, feel free to throw them up there. But yeah, so far JNJ looks solid. Just that we're off my list, I guess you could say. And that SC day trader, when you go back and see Tesla, I've been chirping Tesla for a while now. But let's see. Okay, Visa is a monster. New all-time highs. I got nothing for you, man. Sorry. Yeah, I don't really have anything. See, that's the thing. Like, I don't use the forecasts or the standard deviations to the upside. I don't know. I would prefer to just have like real information to my left, like real price action, to help me kind of make decisions that way. So I do not have anything there for you. But I mean, look, if we were to just go through history on Visa, okay, that's scary. Let's see, this low is 174.60. That low is 174.83. Okay, so we did take liquidity there. That's good to know. Okay, so from this low, we'll just go through and I'll just show you how many times my model is going to play out here. Ready? Low to high, retracement into 50%, bullish imbalance, wick, nothing inside here. Bingo, take off. There's one. Okay, from that next point, ready? Low to high, the high that took out these highs to our left, retracement back down into bullish imbalance. There it is right here. Wick, boom, 50%, takes off again. Okay, from this point, we'll go again for our next little price run here. Retracement into what? Discount, bullish imbalance, wick, bullish imbalance, golden pocket as well. Run to the high. Okay, there it is. Next, bingo. Okay, there's your price run that took out this high here. Retracement into discount, bullish imbalance, check. There it is. Run to the high. Next, wick, retracement into discount, bullish imbalance, check. Run for the high, check. Now here's where it gets a little tricky. Here we go. Ready? This is called a turtle soup. It's not something that I made up, but still valuable to know. Oftentimes, when you have a bullish price run and you get a sweep of the low, right? Like we did. So let's just, for example, like this, right? We swept that low right there with this price run, and you take off, call that turtle soup. It's like a turtle's head poking out of its shell. Just a little bit of a sweep of that low before taking it out on the higher time frame. So you just saw that's my model at work, just over and over again. Something that you can repeat, something that you can back test, something you can go over a bunch of. You can go back and you could see it 100 times over and over again. Those are all things that I look towards. But what else was there? I meant to show you guys Shopify. So we'll do Shopify and then I'll wrap it up because I see this is already slowing down quite a bit. I can't wait to have this new computer. 127. We'll do shop. Okay. So Shopify. It might take a second to load up here. We'll come on over here. But also, who's still in here right now? Who do we got in here? I can't see names. So, shop. I bet you James is in here. James, don't miss. All right, so that's the daily. I want the weekly, though. The weekly is even more prime. Yeah, so check this weekly on Shopify. This is sweet. It's not really where I want it just yet, but that's where I want it. 71.43. I'll explain why. So when you guys, you might already do it, but you're gonna get to a point where you're good enough that you don't need anybody else to listen to, right? You do this all by yourself. Anybody can do it all by themselves. I think just learning the right stuff is a good thing, but I really want that retracement down here to look for a run on these highs. I don't know why my stuff's not loading. There it is. Good. So I'm going to take a stab at it. If we can get a retracement back down into previous buy side liquidity and make that move up towards 98, I hope I get an opportunity, may or may not. No imbalance was formed here. If this were to be the range setter, so here's my model: low to high, retracement into discount, bullish imbalance, take off, take out the high, bingo, done, right? So now at this point, it's going to look something like this, right? Now, I don't know, unfortunately, I don't know if this is the high or not. We haven't made any imbalance to the downside, but let's just look over here to our left and you'll see like this is the level that we got to beat right here. So we finished that imbalance up at 83. So if we were to get that move up to like 83, say, and then get a retracement back down, we have a bullish imbalance here in discount, a bullish imbalance down here in discount too. And then the next draw on liquidity would be 98 from that point. So that's a pretty big move. So that's something that I'm taking a look at. I'm interested in for sure. So that would be Shopify. All right, yeah, let's do Robinhood. And I think unless anybody else has any more, I'll call it quits. But Robinhood, I have charted. I did that one today. All right, here it is. So Robinhood. All right, as we load. Anyways, thanks for everybody who's in here right now. Last stream on this computer, last stream of 2023. To me, it's just a lot easier doing these than typing everything. I'm going to do it anyways for the weekend, but when I do these during the week, when I do them in the group or, I usually do one a week on X, but it's a lot easier to like explain the situation. Hey, VCar, no problem, Jake, Seeker, VCar. I did AI. I'll give you the timestamp for it. 55 minutes in, 59 seconds. So if you want to go back and take a look at that one there. So here's Robinhood. Robinhood actually just did that little turtle soup, shifted market structure bullish right here. So here's just what the overarching looks like. There it is. Zoom out a little bit. There's your low to your, not quite the high. High here, retracement into a bullish imbalance right here. Takes off, took out the high there. And that was your higher time frame liquidity sweeper turtle soup, right? So yeah, I mean 16, that swing high is banana land. That's why I have that banana on there. But yeah, 1649 would be the draw on liquidity, but look how long it would have taken. It's been a year just kind of consolidating, so kind of stinks. Uh, but yeah, that's what I got there. Um, oh, okay. Yeah, PayPal. We can look at PayPal. Thoughts on PayPal? We'll miss the computer. Pauses. Test my patience. Breaker. Yeah. Trust me, my patience is zero from this thing. Oh, whoops. Yeah, I just never had a problem with the computer at all until I started doing streams, really, with like more people. Even when I had, not that many people watching on Discord and stuff, it was never an issue. And then I don't know, maybe it's just storage too, because I have a lot of stuff saved on this one. So I'm just gonna leave the laptop as my more of a personal computer, which I don't use at all, but and have this as a gaming slash stock one. But okay, so here's PayPal. Obviously PayPal looks like junk, but let's just see if we can pick up on anything here. But you'll notice that going through a lot of these, you're going to notice one thing that is recurring, and it's, to me, bullish until we're not bullish anymore. And that doesn't mean on a smaller time frame. It doesn't mean next week's not going to be bearish. Just overall, until something shows us that we should no longer be bullish. To me, there's no reason not to. It's been this way since October. So, okay, so there's your first sweep of liquidity. I need something over here. I need it to load. I just want to see when price was down here last time, if we can use that to help us a little bit. There it is. Okay, so just by this move here, this low, let's just go take a look and see. I'm going to just draw out some levels over here, and then we can see what actually picked up, okay? So here is our first imbalance that I'm going to work with right here. Come on. And when I say the imbalance, it's all just the way it looks, right? No wicks on either side of that candle. That's a bullish imbalance. Yeah, believe it or not, another one right above it. Now we're back in 2017, so that's not great. So there's another bullish imbalance. There's your retracement into it. There's your takeoff. I'm just going to map out a couple more. I forget what price is currently at. So, or what was like the low, I guess you could say. I don't know what the low was. So let's just see. All right, I'm sure that's fine. Yep. Okay. So these obviously, no, you got a green candle out of it, but that was about it. So get rid of that. Bullish imbalance down through previous support. Done. Okay. Check that. Haha. Okay. Bullish imbalance there. Bullish order block. Down close candle followed by an up close candle that closes over the previous open. Price is kind of trickling higher here. Is this an imbalance? Very, very small, but it is one here. Let's just draw that in. It's already there to there. See how small? If I zoom in more, you'll see it. See it? Gap in the candle, right? Now, okay, bullish order block again, and a bullish imbalance up through previous bearish, or I guess resistance would be the word, but previous bearish imbalance. Check. Okay, so ideal situation for PayPal would be a, again, I guess no one would really be like trading this on like a 0 DT, right? So the way that I look at this is here. Bingo. Okay. If there is a retracement into here, to me, that sets up the parameters for the trade. That's 40 cents in risk for a potential $4.30 gain. Does that make sense? Maybe, maybe not. But if you were to get up into this level right here, you will notice that while we do have a bearish structure on the smaller time frame, we are going to take out this high, shifting the short-term run into a bullish market structure. again, remember earlier on in this video, we talked about fractals, right? Everything is fractal, everything's broken down. So right now you have a bullish run inside a bearish run, inside a larger bearish run, inside a larger bearish run. And then from the inception of time, you have the bullish run, right? So taking out this high to me would shift it up. But you do have the rest of this bearish imbalance to fill in. So, I mean, it's probably better than what it's been. That's for dang sure. Yeah. Hmm. I would like to see it take out that high there, retrace back down into one of these imbalances and move higher from that point. But yeah, I've been seeing this one on there too. I thought it was going to be a little bit better of a setup, but not really. So, um, so yeah, there you go, coach. But I think that's all I really wanted. I mean, there's more. Obviously, I charted a bunch of these names, but I'll just post them on Twitter. Um, I guess Pfizer. Let's just do Pfizer last. Let's do Pfizer one more. Because Pfizer, one thing about Pfizer was very similarly to, I forget what name it was. Oh, SE. Very similarly, it took out that COVID low. And once it took out that COVID low, so far it's catching a bib. So the one thing about Pfizer, you have a little bearish fair value gap here. You have a half-filled bearish imbalance right here. A couple more up higher, but typically at those higher time frame lows, you'll notice price likes to retrace. Again, don't take my word for it. Go back in time, and you can, you know, you could see it for yourself. But typically, when we take out higher time frame lows like that, we tend to reverse. So that's just one thing I'm looking at on Pfizer. But all right, well, I think that's all I got. So thanks for watching. Thanks for supporting this year. If you haven't already, follow me on Twitter, subscribe on YouTube, do whatever you got to do. Next year, it's obviously in 2 days, but I got the new computer. The streams will be a little more crisp, a little less downtime. But always enjoyable and entertaining to watch you do this. Super informative. Thanks, Seeker. I appreciate it, man. I gotta get you on here with me at one point. Seeker's a great trader. He doesn't tell anybody, but he is. But yeah, so what else? If you want to join the group into the new year, code Galaxy24 gets you in the group. But yeah, that's pretty much all I got. So I hope everybody has a happy new year. Stay safe, and we'll be back at this in a couple days. So I'll catch everybody.